back to the Halo series. My name is Douglas Brown, CEO at Halo Consulting. Today we are joined by Jason Jacobsohn, founder and managing partner at Propellant Ventures. Thanks for coming to hang out, Jason. How are you today?
Great. Glad to be here. Thanks for having me.
Yeah, absolutely. If you're new to this event, Halo hosts monthly virtual roundtables covering current trends in the HR, tech, and DEI space. Don't forget to check out the Halo mini series, where we hear from executives taking a dive into a multi-part series discussing what's keeping them up at night. If you've enjoyed this content, hit that like and subscribe button, and be sure to visit Halo's LinkedIn page to subscribe to the Halo Content Hub, which summarizes current market trends and recaps past events, and that link can be found in the description. Throughout our session, we will cover unlocking the power of a business network and the vital role for startups in fundraising and beyond. Before we kick off the questions, let's get started with you, Jason. Can you share with our audience where you started your career and how did it ultimately evolve into founding Propellant Ventures?
Yeah, happy to. So I grew up in Wisconsin, went to University of Wisconsin-Madison, and started my career in real estate and finance, but understood early on that relationships were a pretty important part of life and business and started getting involved in student organizations as a freshman and did that throughout my entire time there. So when I moved to Chicago, I already had an established network and continued to build those relationships as I continued on my career in Chicago and started again. I was started with real estate, financial analysis, and consulting, and this was near the tech boom or the first tech boom, late '90s, early 2000s, where I got exposed to entrepreneurship, investors, and founders, and realized that I could be helpful in connecting to different people, whether it is investors, whether it's potential partners, etc. And I made a switch during that time to work at a company that was a matchmaker between entrepreneurs and investors. And fast forward, 20 plus years since that happened, I found myself in the front line supporting entrepreneurs in all these different efforts in Chicago, whether it was at the Chicagoland Entrepreneurial Center, Goldman Sachs 10,000 Small Businesses Program, the Founder Institute. So I was in a position to either start at these organizations when they came into Chicago, or some of them started here, and I was there in the beginning as well. But all of it was tied to relationships for the most part, and I built my network up throughout that time. And as I mentioned, fundraising is something that I spent a lot of time helping founders with. And the opportunity presented itself where I was able to work at a venture capital fund that invests in University of Wisconsin alumni. So perfect, brought my undergrad experience together with professional experience, and that's where I got fully immersed into it. And we did a lot of investments. The time I was there, I led due diligence, sourced deals, sourced a little capital. Fortunately, my time ended there earlier than I anticipated, but that gave me an opportunity to launch Propellant Ventures. And so the other fund was industry stage and geographic agnostic. Propellant Ventures is very focused on the Midwest. I've spent my entire career here. I know what we've got here. Companies are more reasonably valued. We have great founders here. A lot of innovation happening and tackling old-line industries that are ripe for disruption. And so launched Propellant Ventures to focus on early stage. Our sweet spot is pre-seed and early seed B2B tech-enabled businesses based in the Midwest. So, and then we support our companies as well outside of capital, but thought this was the next logical step for me in my career is to launch a venture fund and to invest directly into companies.
Great. Thanks, Jason. Appreciate that context. And we have a Madison grad on our hand. Go Bucky. My business partner graduated from Madison, and we've had the opportunity to go up there for a couple of football games. Absolutely love it. Such a beautiful campus. So
Yep.
on top of founding Propellant Ventures in July of 2020, you've also had a remarkable career founding Reliable Venture Partners in January of 2008. And did I see on your LinkedIn profile that you teach courses for the Driehaus College of Business at DePaul University?
I do, yeah. So everything I've done for the most part the last 20 years is supporting entrepreneurs and investors. So Reliable Venture Partners is called a catch-all organization I started for all these different projects that I've done to support this community. So I've had a lot of different work that I've done over the last 15 years, and so again, it's all around helping entrepreneurs grow their companies. And then I also got my MBA at DePaul University, and so I've been involved off and on for over 20 years with the Coleman Entrepreneurship Center, and I had a chance to teach classes as an adjunct faculty member. About 7 years ago was the first time I was able to do it, and so I teach classes. There's a few different ones I teach undergrad, so freshmen to seniors, and so um, you know teaching them around entrepreneurial mindset. I've done the capstone course where they do a project with an entrepreneur, so they get some firsthand experience working in an entrepreneurial environment. So yeah, it's been in person and hybrid or virtual. So I've done all of that. So I enjoy doing that as well.
Very cool, Jason, and great to hear that you enjoy giving back to the community. Let's dive into our first question. In your opinion, what role does having a strong business network play in the success of fundraising efforts for startups?
It's critical. I mean, that is something that I advocate all the time to founders, and you've got to build the relationships constantly. I know what you want. Founders are focused on their business, but relationships are critical in the beginning, whether it's for sales, partners, employees, capital. So it's absolutely critical. In the early stages, founders are bootstrapping and they're raising from friends and family. So you have to have that network of friends and family, but it goes beyond that as well. So you have to talk to people, let people know that you're raising money. You get introductions to individual investors. Eventually, maybe you get to that venture capital route, and that's still also relationships. It's all relationship driven. There's a lot of tools and online resources to connect people together, but really it comes down to the relationship. And so, and most founders have a bigger network than they think they do. So think about college, think about close friends and family. You tap into that network to get some of the initial capital that you need. So you just have to spend the time doing it. Fundraising can be a full-time job. And if you have a co-founder, that helps because one, you can spend more time on fundraising, but founders have to juggle building their company and fundraising, and you're never really done fundraising. You're going to have multiple rounds. Even if you're technically not taking money now, you're building for the next round. So it's relationships that you're building for, and investors want to follow your progress. So it could be a year or 2 years from when you talk to them, but you've got to keep them in the loop. So it's, and then you also want to find people that are super connectors that have access to other people. And those are really good people to know as well.
Well said, Jason. Would you say being a super connector and having a strong business network are really the two critical pieces of fundraising itself, or is there another aspect that you would kind of your top three to round it out?
Well, so definitely find those super connectors. Absolutely. Those are advocates for you. They're going to help you. Maybe that person's an advisor to your company as well. So having other advisors, having advisors around your company are super important as well because they have a network. Maybe someone could invest in your company as well, but you have to, it's a sales job. Raising money is a sales job. And technical founders have a hard time with that, or they have a hard time selling their service or their product. Find someone that, if you're not comfortable doing it, find someone else on the team. And that's where, good co-founder can be helpful, especially if you're a technical founder. Get a business co-founder. That person hopefully can pitch the business and, help raise money and even sales. But you don't have to do it alone. It's hard to do all that. So find a good co-founder or someone else that can help you with that.
Conversely, have you encountered any instances where a lack of a robust business network hindered the fundraising process? And if so, what lessons did you learn from those experiences?
Well, nothing more at a high level. I would say that companies just don't get in front of investors as they need to. And there's one particular company recently that shut down, had a hard time raising money. And so that's a real problem, especially with the challenging up and down times we've had the last several years. You've got to constantly be looking to find investors. Now, a lot of people will tell you the best form of capital is sales. So if you can generate enough sales and not even have to raise money, good for you. But generally, if you want to scale your business and grow quickly, you're going to need outside additional capital. So, but it can take a lot longer to raise money if you don't have a good network, which can hinder the growth and you could shut the business down at some point because of that. So that's ultimately the worst thing to happen is shut the business down. But that's a real problem if you can't get that capital, whether it's revenue or investor capital.
Hmm. And Jason, from your experience, do you have any best practices or advice that founders should follow to help get in front of investors on a consistent basis if they are in fundraising mode?
Yeah, so there's so much more now out there, especially because it's a virtual world. There's a lot more than there used to be. So seek out opportunities to present at different virtual events, even if you may not understand whether there's going to be a lot of investors. People know people, so you need to just get in front of people as much as you can. So try to present at those different events. Try to get introductions to angel groups. They present on a regular basis or have meetings on a regular basis. Pitch competitions, look for those. Go to in-person events for entrepreneurs. Investors do show up at those, but obviously try to go ones where there's more investors. Tap into your alma mater if you went to college. Most colleges nowadays, especially mid to big, large colleges, have an entrepreneurial program or entrepreneurial network, and investors are associated with that. So look for that as well. And LinkedIn, believe it or not, is a good channel as well. You can reach out blindly. Maybe you'll get an introduction, or maybe you'll get someone to respond to you, but try to get an introduction wherever you can through LinkedIn. Not everyone lists that they're an investor in LinkedIn, but some people do, and tap into that. There's Angel List is another source that a lot of people use to raise money. Gust is another one that's tied to angel groups. So there are a lot of resources out there. Sometimes those crowdfunding sites may be a good fit for you as well, the equity crowdfunding sites. If you're doing a physical product, then maybe Kickstarter. Now, the thing about crowdfunding, you still have to promote it out there. About 70% of the traffic that goes to those sites needs to come from you. So a small percentage is generated through those crowdfunding sites. So you still need to do the work to get it out there, but they organize it for you, and there is some additional people that could see your deal that you may not have met otherwise.
And when we think about crowdfunding or the angel list, is there a specific amount that those investors are looking to invest in a startup? Is it 50,000? Is it as high as 500,000? Is there a limit?
Not really. So the equity crowdfunding sites will help you think through that. If you did something like Kickstarter where it's physical product, you want to have a lower amount, because if you don't raise the number you say, you're not getting anything. So say you need 100,000 to launch, but you put 20,000 on Kickstarter. If you get, you can oversubscribe that. It's better to do a lower amount on something like that. But when it comes to equity crowdfunding or any equity, you want to make sure you raise more than you need, because it takes a while to raise money, and you don't want to raise just the dollar amount you need. Raise more, but you need to have a use of funds. How are you going to use this money? It could be next 12 months, could be 24 months, 18 months, whatever it is. Have enough to give you a good runway, especially in the times we're dealing with right now. But so there's no minimum, but like on systems like Angel List, syndication. So people may only do $1,000, maybe 5,000, but it collectively comes together as a group. And so to raise a bigger dollar amount. So I would say, average investment by an angel investor is 25,000. So if you're looking to raise VC, that's different. There's other channels for that, but angels are the ones that are really hard to find, because not everyone advertises that they're an angel, and there's a lot more angels out there than VCs. So there's different stages that you have to go to raise money.
Great. Thanks for that context, Jason. Let's pivot to the importance for startups to build and maintain relationships with potential investors, mentors, and industry experts. Can you share any strategies or best practices for developing these types of connections?
Yeah, super important to have all those resources around you. So similar as raising capital is leverage your network. So if you're looking for a certain specific resource, you have a certain need, contact people that you know. So attorneys, accountants, bankers are good advisors for you. They can help you find some of those people, so that they can even help you find investors. So If you're a client of theirs, they want you to succeed. So ask them to connect you to different people. That's a good starting point. And you can reach out to people on LinkedIn, again, subject matter experts, but ask for referrals. Ask other entrepreneurs who they've used for those services. And that's a great way to get a good trusted resource. So referrals are key for anything, really. I wouldn't blindly look for someone. I would get that referral. Now, every once in a while, you may get lucky with a blind reach out, but I would definitely get that referral and get involved with your alma mater again. You can meet some alums, and maybe there's a trust factor there. And there's online resources. If you join an accelerator, there's a lot of resources involved there as well, or membership groups or whatever it may be for entrepreneurs. They have all these partnerships of companies that offer discounts, and it's a good way to find some of the individuals that you could potentially help you in the future.
For the first time founder, Jason, any context you can share on how frequently, the first time founder should reach out to these individuals to keep in touch and stay on their radar?
Well, so if we're talking about investors, you want to have a newsletter or some update you send on a regular basis. It could be monthly, quarterly. Get permission, ask, hey, can I put you on this list? And most of the time they'll say yes. That way, if they're interested in what you're doing, but they want to be kept up to date, and so that you stay top of mind. So definitely do that. You could also ask some of these service providers if they want to be on that list, but it's really that it's probably the other way around. They put you on their list. So, because they want to work with you. But the investors for sure have one of those newsletters, but you can do it for anyone as well. And I would, stay in touch monthly or quarterly. I think it just depends on the rate of your growth.
Right. When we think of founders pitching to investors, what are the key elements or information investors are typically looking for in a startup pitch? And can you provide some insight on what startup founders should include in their pitch to increase their chances of attracting an investment?
Yeah, so most founders at the early stage should have a pitch deck for a live pitch or something to email. And either way, it should not be very detailed. The goal of a pitch deck is to get to the next conversation. You want to get someone just interested enough to want to have another conversation. Then you can go into more detail. And when you put your data room together, you can also have a more detailed deck. So decks need to be high level, very graphical, not a lot of words. The last thing you want if you're presenting is someone trying to read your slides and to listen to you at the same time. So keep it minimal. Even when you email it to someone, I get pitch decks about every day, and if it's too detailed, I'm not going to look at it. You just want to get someone interested to want to learn more. So with that said, if you're presenting it live, in person, virtual, whatever, or you record yourself, you want to start with a story. Story is super important. That it humanizes it, it personalizes it. That's your why. That's why you started the company. Most of the time, you've identified a problem that your personal problem or business problem that you want to solve, and you realize that there's a bigger problem to solve as well. So starting with your own story is really good. And then the whole pitch deck is a story. So you want to have a compelling problem. So you want to be able to talk about the size of the problem. How large of a problem is this? What's the impact this problem has on your target audience? A lot of founders just put symptoms. These are some of the things happening, but we want to know, what is the impact of this problem? How has it impacted people? Could be a dollar loss, could be a inefficiency, but quantify wherever you can. That shows that you understand the problem and the impact it has on your target audience. And then from there, there's all these other things to talk about. So the solution, tell us what you're offering, but also screenshots. If it's product, if it's a technology, show us how it works. Tell us what you're doing, show us how it works. And then you want to talk about the size of the market. A lot of founders or a lot of people got TAM, SAM, SOM, total addressable market, serviceable addressable market, serviceable attainable market. How large of the market is, where are you starting, and then narrow it down, and where is your starting point, and that should tie into your target audience. Who are you, and then your go-to-market strategy. How are you marketing and selling? Your business model, how much you're asking, what round is it, how much you're asking, show us the use of funds. Usually a chart is good. Could be sales and marketing, operations, product development, and tell us what milestones you're going to achieve with that use of funds, and then have a contact slide at the end. But I do a lot of pitch coaching to founders, and these are things that I talk about. And you have to have a good, compelling story, and don't tell us everything right away. Just keep it just at a high level enough to get people interested and want to learn more.
Appreciate that context, Jason. Can you touch on the importance of reaching out to angel investors or even a VC firm based on the stage that you're at for your own company, as well as the industry focus, and what the importance is behind that?
So you want to understand, you got to understand what stage you're at and what investors look at your stage. So most companies never get VC money, but angels, friends and family is the starting point. So this is where you need to do a little bit of research. Maybe it's from the introduction you got, or maybe you can look online, but make sure you understand that person you're talking to, this is the stage they like, the industry, they may have a geographic focus. When it comes to VCs, that stuff is known for the most part. They have websites. That's very clear. You can see their portfolio. Angels don't have as much information. So you can look on angel lists, and there are a lot of angels on there, and you can see their portfolio. Some do have their own websites. Some list on LinkedIn what they've invested in. But you want to make sure you have a good match. Otherwise, you're wasting time on both sides, and it shows that you didn't really do your research. So founder also has to do the research on the investor.
Let's move on to our next question. How do you foresee the role of business networks evolving in the future, considering the changing landscape of fundraising and the startup ecosystem?
So at the core, relationships are still very personal, and it's still a one-to-one match. But there are a lot more tools online to meet people with the metaverse, virtual environments, all these online systems to connect entrepreneurs and investors together. So I think some people will probably get a little too lazy and rely on all the technology to connect people together, but you still want to have those conversations with people. So one-on-one conversations are still important. Now, with that said, you don't have to have everything done in person anymore. I would still do a virtual call with someone just to get to know that person. So you don't have to meet people in person anymore. Sometimes investors want to meet you before they make the investment, but the first call, even doing due diligence, you don't need to fly out somewhere and spend the money, spend the time doing it, unless it's someone in your backyard. But it's made fundraising a lot easier. Actually, it's more economical. You don't even have to take someone out to lunch every time or have a coffee meeting. You can just do a virtual call. So the whole practice now, talking virtual, where it's commonplace now, is super important. When I was at my last fund, we used Zoom, but we didn't use the video. It was just a dial-in. Now they use video there, but at the time, it was a tool to allow us to have a conference call. But now video is super important. And, don't hide behind the screen. You dress how you want to dress, but dress how you would in person, right? I still dress business casual because I think your brand is important, and you want to portray yourself the way you want to portray yourself, whether it's in person or online. So the etiquette is not there for some people with virtual discussions, but you got to do what's most comfortable for you.
That was some great context, Jason. And what really resonated with me, as you mentioned, was at the core, business networks are important as relationships are a one-to-one match. And that's really true. And you can't really, get away from that at the end of the day. We have a couple of last questions here. What advice would you give to entrepreneurs and startup founders regarding the significance of a business network in the fundraising journey?
It's critical. Start building relationships before you start the company. So even in college, that's when I started doing it. And my brother was a mentor and a guide to me, 3 years older in college, and he got me involved in student organizations right away. And that's been a big part of who I am. And so pay it forward. If you connect people together, and that will come back at some point, or if you're asking for assistance, those people will gladly help you. So help wherever you can. Don't expect anything in return, but relationships are everything. I mean, that's something that you can take with you no matter where you're at, whether it's starting a company, working for someone else, but you can take those relationships. That's your biggest business asset, is your relationships.
Absolutely. Yeah, that's one thing that I really wish that I did better in college was being more involved in the extracurricular clubs and groups. And I
Mhm.
think there was, one econ meeting that I went to at the University of Kansas, and then I thought it was kind of pointless and stopped going. But looking back and looking at where I'm at now in my career, it's something that I definitely wish I participated in and was more involved in. Um, things that I'm working on today to be more involved in our community. We wrap up with our final questions, Jason. Who should reach out to you and why? And what's the best way to connect with you or get in touch with our audience?
Yeah, I'm always looking to meet investors and entrepreneurs, anyone that just wants to talk about the Midwest investing scene, and that's our focus. And I'm always willing to support and help where I can. So people can find Propellant Ventures at propellant.vc. They can also email me at jason@propellant.vc. So I'm always looking to connect with great people and see how I can support the ecosystem.
Awesome. And the last question we have for you, Jason, is there anything you'd like to share or talk about in terms of the work you're doing today at Propellant Ventures or personally?
We're just excited about what's happening here in the Midwest. We have some great portfolio companies that are you know really innovating within their industries, and there's a lot of great founders here in the Midwest. So we're very bullish on the Midwest. So we encourage investors to continue to look at founders and companies here in the Midwest.
Awesome. That's great to hear, Jason, and really appreciate you taking the time to join us today. It was great having you on the Halo series, and we look forward to staying connected moving forward.
I appreciate it. Thank you for having me.